Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Tuesday, 16th of October 2012. The top headline for today is that Eurozone slaps additional sanctions on Iran oil, gas, and industries, and this is made it against the major Iranian state companies in the oil and gas industry, and also strengthened the restrictions on the central bank, cranking up pressure over Tehran's nuclear problem. Among the more than 30 companies and institutions listed in the EU officials journal as targets for asset freezes in Europe was the national Iranian oil company, one of the world's largest oil exporters. Recall the United States imposed restrictions last month as Western governments seek to curb the Islamic Republic ability to obtain funds through oil exports worldwide. Immediate reaction on this was bounce on the oil price as November crude oil jumped from yesterday's low at 89.78 back to the levels above $92 per barrel. From the other markets, still a sort of indecision seen in the euros and sterling's action, despite euro having some positive sentiment of yesterday's low at 129.00, approaching 130 barrier, but still a lack of clear action. Higher seas, the pair still entrenched within the range. On the upside, we have 130 as it comes this morning and under the pressure, yet not broken, and then more significant is 130.70, the range top break of which is basically required to direct the pair towards the upside. Of course, on the downside, we have 129 and a very strong support at 128. Sterling is also approaching important 161 barrier. No break so far, but positive structure seen on the near-term studies on both instruments still sees more potential towards the upside. Of course, we're going to elaborate this more in our technical part. The dollar gets well supported after yesterday's better than expected US retail sales jumping against yen to close to 79.00. This is our initial and psychological barrier, break of which is required to open way higher, and the test of key barriers at 79.21 and 79.37, while dollar against Swiss continues to trend lower. Again, fresh weakness that emerged of yesterday's upside rejection at 93.50. Just to make sure, at 93.70, that also marks around 50% of the latest down move, is now attacking 93.00. This morning we have seen the brief break below that will likely signal further extension of the larger downtrend from 99.70. Crude oil, as said, regained the 92 levels, keeping again positive sentiment for possible attack at the upside. Key barriers above 93.00, between 93 and 94. Also some recovery seen on gold that was that is currently correcting the latest dips. The fresh low yesterday seen at 17.28. This is what we were talking about yesterday. Break below the range floor at 79.36. This was the spike low of 26th of September 2012. And now more likely signals some stronger correction of the latest up leg from 1590 to 1795. Of course, we are talking about 10 years uptrend of yellow metal that basically failed to regain psychological and strong barrier at 1800, and this is the immediate reaction. Fresh easing lower with 1728 seen so far, looking for 1717 and then 1700 as psychological support. Again, more of this we will see on our technical part that will follow shortly. Just brief comments from economic indicators released during the night. Minutes of Australian central bank recent meeting showed that central bank cut its interest rates earlier this month as a pullback in mining investment, and the darker global outlook meant domestic growth would likely be lower than expected in the year ahead. in minutes released of the 2nd October meeting, where the Reserve Bank of Australia lowered its cash rates by a quarter point to 3.25%. Board members also noted that the labour market has had softened recently, and the board judged that it was appropriate for the stance of monetary policy to be a little more accommodative, thereby providing some additional supports to demand over the period ahead. And the Greek Prime Minister says that he's confident Athens will secure the next aid tranche, and they will conclude austerity talks with its lenders to continue receiving the bailout funds it needs. The Prime Minister Antonis Samaras said yesterday, but officials said the talks would most likely not be finished by Thursday's EU summit. Greek will soon get the next tranche. Its economy needs liquidity like a desert needs rain, Samaras told in the press conference in Athens. But from the other side, the finance minister of Greece told reporters negotiations would most likely miss a target to complete the talks by Thursday, when a European Union summit takes place. And some other officials confirmed that two sides would not finish negotiations by Thursday and would resume talks after the summit. As we mentioned yesterday, most likely scenario would be the package for Spain, Greece and Cyprus to be bailed out at once. Of course, Greece to continue, and Spain needs first to request with the negotiations between Cyprus and the European Union Troika are underway, and most likely, as said, one package for all three countries will be created, and financial support, of course, given to all three of them at once. Spain is currently delaying due to the local elections, and most likely after that, and of course after the in today's meeting, a Eurozone summit, will have most likely more clear picture about the situation, and the more clear picture about the time when it will be requested, and then most likely how and when will be, under what conditions will be approved and given to these countries. Regarding today's calendar, that is quite full, starting with UK's data at 8:30 GMT. PPI is the first one. Output for September 0.4 versus 0.5%. Input 0.6, significantly lower from 2% in August. HPI 1.9%, slightly below 2% in August, while inflation monthly for September is forecasted at 2.2%, slightly below 2.5% inflation in August. Core CPI is expected to stay unchanged at 2.1%, and then a batch of data from Eurozone starting at 9 o'clock GMT. Trade balance for August is forecasted to show the narrowing of the trading surplus from 7.9 billion euros in July to 5.4 billion euros in August. This is according to the forecast, with inflation, monthly inflation for September expected to stay unchanged at 2.7%, while core CPI is forecasted slightly higher at 1.6% compared to 1.5% in the month of August. Eurozone zoo economic sentiment for October due at the same time shows, according to the forecast, improvement as minus 1.1 is the consensus for today, compared to quite negative minus 3.8 in the month of September. Of course, also includes the German zoo economic sentiment that is due at the same time. Also slight improvement, but still quite in the negative territory. Minus 14.6 is the forecast, compared to minus 18.2 in the month of September. If these things come as forecasted or even better, then we will have euro much better supported. Of course, whole day's focus is on these data, especially the inflation data, as most of the countries are releasing them today. We have the United Kingdom, Eurozone, and the United States releasing the CPI data today. So after the Eurozone data, we are moving to the Americas. At 12:30 GMT is the start of the Canadian data. Foreign securities purchases that are forecasted to show the increase to 8.4 billion Canadian dollars compared to 6.67 billion Canadian dollars in July. Manufacturing sales in Canada are expected again to improve to 0.5% compared to -1.5% in month of July. And the U.S. Inflation for September is forecasted monthly is forecasted at 0.5% compared to 0.6%, slight drop, while the core CPI is seen at 0.2% compared to 0.1% in month of August. U.S. industrial production due at 13:15 GMTs, according to the forecast, back into the positive territory by 0.3% compared to decrease in by -1.2% in month of August. And the capacity utilization rate also is seen improving. 78.4% is forecast for today compared to 78.2, along with the housing market index due at 1400 GMT for October, a slight improvement. 41 is today's consensus compared to 40 in the month of September. And that's all from today's calendar. We're going to move now to technicals and see the latest developments in the markets and the expectations for today, as we start with the single currency. Still no clear situation on the hourly regarding the trend, and the 4-hour chart still lacking a trend, as basically the pair remains entrenched between 128 and the 130.70 range, still in directionless mode, but fresh strength that appeared of 129.00, yesterday's higher low where the temporary base was found, and the quick recovery is now attacking 130.00, 129.99 seen so far, with the quite positive tone seen on the hourly chart, seeing potential for a possible extension higher, as initial barrier at 129.90 now has now been cleared, and the most likely scenario will be attack at 130.00. However, we need to see break above trend line resistance that is currently at 130.25. This is a tentative bear trend line drawn of 131.70 through 130.70, and to attract the upper boundary of the near-term range at 130.70. This is the high of 5th of October 2012. Significant is the appearance of doji candle yesterday that is still questions the current situation, basically shows indecision at this point. Of course, the break above 130.00 and 130.25 as our initial barriers would be quite supportive, and would minimize the meaning of the doji candle. On the downside, 129.50 is the minor support, overnight's low, and then 129.00 is the next one. This is also the trend line, 129.55 is the initial one, 129.36 is the tentative bull trend line of 128.25, and 120, this is equivalent to the higher minor higher platform at 129.28, ahead of very important 129 higher base lows of yesterday, loss of which of course would again turn focus towards the lower boundaries of the near-term trend. As said, the near-term structure remains supportive and positive now, and the more likely is the attack through at 130 and 130.25 in order to confirm the near-term bullish stance of 128.25. This is last Thursday's low, and also 200 days moving average that so far holds the downside. Break above 130, break above important 130.70 is to refocus top at 131.70 and possibly signal a resumption of the larger uptrend there from 120.42 low of 24th of July 2007. Conversely, loss of 129.00 is to turn the focus again towards the near-term range floor and strong support at 128.20, 128.00 zone. A cable also near-term price action of recent low at 159.75 low posted last week is steadily heading higher, as initial attempt last Friday failed at 160.96 and subsequent corrective action found support above 160.00, the psychological support at 160.20, where the base has been built for a fresh attempt higher. This morning's action reached 160.95 and seems to be hesitating at this strong barrier. This is basically marking approximately 50% retracement of the downleg from 162.16 to 159.75. And break here is required to resume the near-term recovery and open upper levels. 161.24 is the 61.8% retracement break, of which is to give more credibility to the current recovery. Need to mention that the pair still remains in the firmly in the downtrend of 163.08 peak of 21st of September, and basically break above the trend line resistance, which is currently at 161.83, and regain of minimum 162.00. Psychological barrier is required to turn near-term focus higher and signal possible basing at 159.74, the low of last week. Otherwise, further consolidation between 160 and 161 could be quite likely scenario, as again we are having the doji candle on the daily chart yesterday that again shows signals indecision in the current price action. Basically, the near-term price action is now congested between 161 and 160.20, and of course the tone is more skewed towards the upside at this point, but a lack of strength to clearly break above 161.00 might be signal for further congestion between 161 and 160.20. And dollar yen continues to steadily move higher with 78.92 seen so far, following a break above previous high at 78.86. This is the high of 5th of October 2012. Keeping focus at the upside barriers. Initial 79.00 is now under heavy pressure. This round figure resistance also marks the daily Ichimoku cloud, the top break of which is to confirm near-term bulls of 77.00 and 77.42, with the latest leg higher seen from 78.00. A break of 79 figure is to open another key barrier. 79.21 is the high of 19th of September, and the 200 days moving average at 79.36 currently, as the pair lifts above 78.71 and 90 days moving average as shown on the daily chart, with the daily studies now breaking above their midlines and pointing higher, being well supportive for possible action through 79.21, 79.36. That will open way towards another barriers. Intermediary one is 79.65, 20th of August high, and then 80.00 as psychological and round figure resistance. Near-term studies are in the positive territory. However, the overextended hourly studies and hourly indicators might signal, as we have faced already one dip lower down to 78.80. This marks also the previous resistance now acting as support. With the 78.67, it's the trend line support, and basically any stronger dip should ideally be contained at approximately 78.50 zone. This also marks previous high of 11th of October and near 38.2% Fibonacci retracement. As at or above this level, any stronger dip should ideally be contained for a fresh attack towards through 79.00 towards 79.21 and the 79.36, while break below 78.50 would risk test of another a very strong support at 78.30, 78.25. This is 61.8% retracement and a higher base, loss of which, of course, to put the bulls aside and turn more focus towards the downside. As I can see, okay, now you can see the connection is a bit slow. Dollar Swiss remains in the firm downtrend as recent break below Ichimoku cloud base and the break below the previous low at 93.00 now opens way for a fresh extension lower as a recovery attempt of last Friday's low at 93.04 stalled at 93.70. This marks approximately 50% retracement of the latest down leg from 94.30 to 90 previous low at 93.04, leaving a lower top at this level ahead of a fresh slide lower. Brief consolidation, and this morning's action is now turning focus towards important and 92.73. This is the low of 5th of October 2012 for possible full retracement of the corrective action from 92.37 low of 14th of September. That was basically capped at 94.36 and 94.30. Immediate risk as set is seen on a break through 92.73 to open way towards 92.37 and the signal double top formation of 94.36, 94.30 as 200 days moving average so far firmly caps the upside and the price action remains below the bear trend line of 99.70 peak. More focus as said seen towards the downside. Daily studies are firmly in the negative tone with the fresh loss of momentum seen focusing 92.73 and then 92.37 possibly on a break. A negative tone also dominates on the lower time frames with the significant to mention the RSI on the hourly chart is now entering oversold territory. We might face some brief corrective action due to oversold conditions. Yet no any firm signal. Is just probability of corrective action as this usually happens in the markets. But clear focus remains on the downside, 92.73 and the 92.37, and basically break of these levels to open way for a further retracement of the larger up move from 90.41 that peaked at 99.70. And a quick look at oil that again brought near-term bulls in play following several upside rejections at 93.30 initial barrier and yesterday's dip down to 89.78 followed by quick recovery to levels above 92.00 with the hourly studies now turning positive, seeing more potential towards the upside. 4-hour structure is still holding around their midlines, lacking so far momentum for fresh strength, but break above holding above 92, 92.20 still keeps a probability of test of upper barriers 94, 93, 93.30, 93.65, and then more significant 93.80, 94, and 94.20 barrier. As I would say at this point we are still in the sideways mode, defined on the downside by 89.78 and the upside 93.64, and basically break of either side is to give us a more clear picture, as basically the oil remains congested under important, I would say, 94 barrier, with more focus seen towards the downside, as the daily studies are still in the negative territory, with yesterday's brief break below 90 days moving average that's currently at 90.47, and quick recovery still lacking strength for a break above 93.80, 94 barrier. That will provide relief, and basically will confirm the base at 87, higher base at 87.69 for possible extension higher. Of course, a lot depends now on the politics and the news, as the latest sanctions imposed by European Union gave a great boost to the oil price, with, of course, current tensions in the Middle East, especially with the Syria and the Turkey, again are being well supportive, and for now offsetting fears of deepening crisis worldwide. That is, of course, as a result, will have a lower demand for the energies. Also, the improvement in the U.S. data recently released see more potential for a stronger growth of the economy of the world, largest oil consumer, United States. And finally, gold, as said, remains under heavy pressure. In yesterday's comments, we said, and of course I mentioned later on the written analysis that were distributed, that the main risk remains towards the downside, as the yellow metal failed to regain 1800 barrier. These are the highs of November 2011, and also psychological resistance. And basically, we see now the risk of a stronger corrective action of the latest upleg from 1590. This is the low of 15th of August 2012. That peaked at 1795. This is the fresh high of 2012, with break below the initial supports at 1755, and now cracking 1736 as the near-term range floor, opening way towards 1717 as 38.2% retracement, and then 17. Also, this is a low of 13th of September 2012, and 1700 as a psychological support, reinforced by ascending 55 days moving average, as showed on the daily chart. More supportive is still seeing the golden cross of 55 over 200 days moving average, and attempt of 90 days moving average to create another golden cross that might reduce the impact of the current reversal, and offer good support at approximately 1700 level. But negative tone that dominates on all daily studies sees, of course, more potential towards the downside, as we lost some important supports. Gold is likely setting scope for a stronger corrective action of the upleg from 1590 to 1795, with the ADX studies showing a clear downtrend at this point on the 4-hour chart, and the Ichimoku studies are confirming on the 4-hour, confirming firmly the downtrend, while daily Ichimoku studies are giving initial signal of weakness, as the gold price dips below the both moving averages, Tenkan and Kijun Sen, with the cloud top currently at 1708, reinforcing the downside supports at 1717 and 1700. Ideally, any further dips should be contained at or above 1700 to keep the larger bulls in play, while break below 1700 would probably risk full retracement of 1590 to 1795 rally, and the open levels 1600 and 1590 for test. That was all for today from me. I hope you didn't have any technical problems. As I can see on my screen, sort of delays in the appearing the charts. When I put the chart on the screen, it takes some time. I hope this did not affect the session. If you have any questions, please, you can submit them now. We have the Aussie dollar. I see that there is sort of a delay because I have already put the chart on and it's still not showing, obviously something to do with the connection and speed. Okay, now you can see it, I guess. Basically, the fashion of appearing of doji candles is quite popular these days, as we have another dragonfly doji on the Aussie dollar chart, as the pair bounces of important support and range support at 101.50-60 level, regaining so far 103 barrier, but sort of hesitation is seen at this zone. It's better shown on the 4-hour chart, where we have the upside still limited just under 103.00, with the downside being supported at 102. So basically the near-term price action is congested between 102 and 103, but appearance of doji candle shows sort of indecision, and if we don't see the clear break above 103, and I would say another very significant 103.30, this is 38.2% retracement, also the previous low that is seen as a trigger for a stronger recovery. The further hesitation and further congestion could be quite a likely scenario, as the 4-hour chart studies are quite neutral at this point, though the hourlies are still pointing higher, and the RSI is now approaching the overbought territory. That will be additional pressure ahead of 103 barrier. As said, the daily structure remains still negative, as the price action of the pair is still close to the lower boundaries of the larger trend defined at on the downside at 101.60 and on the upside at 106 approximately 20 zone, as the 200 days moving average at 103.42 currently still limits the upside, and of course the appearance of doji shows that still no clear direction and still no strong decision is will be quite likely scenario at this point. And as said, failure to clear 103.00 is this is also reinforced by 4-hour Ichimoku cloud, the top currently at 103.11. Basically, failure to clear these levels might be signal for further congestion, while of course a loss on the downside of 102 higher low would then focus again towards recent range floor at and lows at 101.50, 101.60. Any further questions, please? Okay, it seems no questions. In that case, we will conclude the session, as our Arabic session will start in approximately 10 minutes. I would like to thank you all for being with us today, and of course I expect you tomorrow again at the same time at 7 GMT, 10 o'clock local Cyprus time. Number of releases today, so keep an eye especially on the inflation ones. I wish you a nice day, and of course successful and profitable trading. Good luck.